Yo, what's going on?
I was just about to give a quick rundown. So this is the monthly AMA that we do here on Amalgam's Discord. This month we're joined by Mellow, and there'll be it's Mellow Finance or Mellow. I never actually know which it is. In my mind,
You can
it's
say mellow. You can say mellow.
okay.
Yeah, yeah.
Okay, perfect. Yeah, Mellow, and yeah, we'll be breaking down some vault related stuff. And also joining us is Will, aka Julian Galois, Amalgam's founder, and I am just here to facilitate head of head of marketing at Amalgam. Yeah, Etienne, head of ecosystem at Mellow. I believe I said that, Etienne, right?
Yeah, that's
Um,
perfect. Thanks a lot.
do you want to start off giving us a quick intro of who you are, who is Mellow? What does Mellow do? Sorry.
Yeah, sure. So first of all, like, thanks a lot for having me today. Like, it's always a pleasure to chat with DeFi OGs, and we've been chatting for quite some time now, and excited to delve a bit more into the Vault topic, which is like something that we've been working on for the past 5 years at Mellow. But so on my side, so as you mentioned, I'm Etienne. I'm the head of ecosystem on the Mellow side. And so I have a background I'm from France. I have a background in finance. I've been working in structured finance for 5 years as a consultant in major like European banks. And then I co-founded a fintech company still in structured finance that got acquired a few years after the creation of the company. And at the same time, more or less, DeFi summer kicked in 2020, and I got completely hooked by Sushi Swap and all the food farms. And so I was like, yeah, maybe it's the future of finance. You never know. And looks, we were collectively more or less right. And so I started working for the various companies, mainly in the DeFi space, and eventually joined Mellow to run the ecosystem there.
Fantastic. How long have you been with Mellow now?
It's been a year and a half, I would say. But Mellow has been running for close to 5 years now. It's
This
yeah,
is
OG company as well.
very
I
OG indeed.
I love all the food farming and how like that phenomena like brought so many people in. It was like watching it from afar. I remember just being like, "This is so nuts!" Like people are farming yams, and somehow this turns into money. And I'm not sure if this is completely all bullshit and a scam or the most amazing thing that's ever happened. And it was like it hooked me. So I totally relate.
That's where all the real current DeFi enthusiasts started out, it turns out. All right, awesome. And real quick, before we get into things, an overview of the agenda for today. It's going to be about an hour or so long. We're going to go through some updates on Amalgam and where everything's at with progress towards mainnet, our launch, and we also had some interesting other activities going on the last month or so since our last AMA, and then we'll go into a bit more of a deep dive discussion on some topics that we've got lined up to talk with Mello about, and then we'll go into some live questions from the audience. If anyone has any questions, drop them in chat now or throughout the call whenever they come up, and then we'll close things out after that. But yeah, real quick. So from Amalgam side, the last month has been an intense month of building from the dev side, and then marketing has been doing some traveling, although Will has also been traveling with us. We went to Token 2049. We hosted a go-karting event, which was sponsored by co-sponsored by Sonic, Gaib, and ODX, and that was really cool. It was myself, Henry, and Will that went to Token in Singapore, and that was, I think, incredibly successful. I think it was more successful than our ECC event, which we were also really happy with how that went at the time anyway. And I think we had about a little under 100 people turn up overall, which was there was some issues with the fact that F1 was happening like a day after, so all the roads were closed and they were setting up and everything. So people had some trouble getting to the venue, but everyone that managed to get there had a fantastic time, and we made some really great connections throughout the whole of Token 2049. Yeah, Will, I don't know if you want to say anything else about Token and how things went, but for me at least, I feel like it was the
Y-
most successful
No, I think
conference
both
type?
the last two events were super successful. I think there's a lot of things that we had to struggle through the first few times we did the event, and it's turning into something that feels really professional. And I think the thing that we keep iterating every time, right? So this time we tried to do panels, which worked out. We got 50% of the panels that we planned done, but that was on the other sponsor not really wanting to do the panel that they had said. But so I think we recorded it. I don't know how the recording came out, but we had a fun conversation that sort of may actually tie into this conversation a little bit, at least from our perspective, maybe not as much on the mellow side, but about vaults and specifically how we are intending on setting up vaults to funnel market making liquidity into Ammalgam and hedging it with options. So we had Derive and one of the somebody from BD from DWF, which is a options from the options market making side, and just had a conversation about options and hedging and permanent loss, which Derive has done some research on recently that I thought was a really interesting conversation, really relevant to what we're doing.
Yeah, it was. I did manage to record it. I think at least one of the clips was posted on Twitter, I think 2 days ago now, and it was. We didn't manage to get a professional camera set up, so it's my best recording work that I could
I
manage.
think
But
we're more than
yeah.
professional. I don't know how it turned
Mm.
out, but
I was more so saying we didn't have a stand, so I was holding it. We needed to stabilize the recording, I think. But yeah, so we'll upload the whole thing at some point to YouTube and have it available if the footage is good enough. I think Misha still needs to go through that. But yeah, I thought it was a fantastic conversation. I thought it was really interesting, and I feel like the panels there, or the panel, I should say, did end up working out. Like everyone was very engaged, and I feel like the conversation and discourse was definitely valuable to listen to. But yeah, so that was Token, and I think for the rest of the year, we're not really planning to go to any conferences outside of will be going to DevCon in Buenos Aires if anyone is there and wants to say hi. But I think other than
I
that,
will
will
be.
be you will be fantastic.
Yes, let's go, Will.
Well, then you guys can connect. I think that we were considering going with me and Henry again, and maybe even doing a side event. But I think that DevCon is perhaps more of precisely a dev event that is less of a marketing BD potential there. But who knows? Maybe when Will goes, he'll find something very different, and we'll end up coming next year. But yeah, so it's been a few months now of us being on testnet and with beta being available. Will, do you want to give a quick the mandatory development update on how things are going, where things are at, and how we're progressing towards mainnet?
yeah, sure. Right now, we're just going through the feedback from the Cantina audit, which, quite frankly, was like the best ROI of security we did. I love all the auditors that we worked with. They're all super smart, capable people, but the sort of competition style audits are just super. Our results were like just very comprehensive. We found results that, quite frankly, and not to diminish any of the auditors we worked with, but the other auditors missed, right? These were issues in our code that have been there that got missed in the first two rounds of audits. Yeah, super excited about the comprehensive nature of the results that we got from Cantina. Can't speak highly enough about them. And I don't even know if it's them. Cantina was great, but I think just the audit competition style I'm very bullish on after going through the process. And so anyway, that happened. We wrapped that up in July or August. I think it ended in July, but we didn't really have the final results until August because there's a lot of sifting through things. And since then, we've been making the fixes. There's a few sort of higher level things that took a little bit more design and going back to the drawing board on that took some time to plan, and now everything's planned. We have a plan for everything of what we're going to do, how we're going to fix it. We have all the tickets groomed for engineering, and we're just going through them. So I think I can't remember exact number because somewhere around, this may not mean anything. We have a pointing system that's completely arbitrary. It means something to us, but it probably won't mean something to everyone else. But we're trying to, I think we have 70 some point tickets and we want to get through them in 3 sprints. So that would be actually the right before Dev Connect. So Dev Connect, I think I'm leaving on the 17th. That third sprint ends the 15th or 16th. And so we're trying to get through all of that by Dev Connect is the goal. With that, then we'll need some time to get review from auditors, but I'm going to try to keep that cycle tight. So talking to auditors right now, seeing if we can get some commitments for them to do a final review of the fixes, and then launch as soon as we can after that.
And that will still be within Q4 of 2025 is still on track.
Yeah, I'm hoping that we could do it within November, right?
Yep.
Even with Dev Connect, some of it depends on auditor feedback. Again, making sure that we're continuing to work with the security community and keep iterating if there is issues that they're seeing.
Yep. Perfect. All right, exciting. We'll keep an eye out for more updates around the time of Dev Connect then. I'm sure everyone will have their eyes peeled. All right, back to the land of Mellow. Etienne, do you want to give, I know you already gave a quick intro of Mellow, but do you want to give a bit of to kick off the discussion, do you want to give a bit more of a comprehensive rundown of what is Mellow, what do you do, and also why do you do it?
Yeah, definitely. As I mentioned briefly at the beginning, so we've been building in the space since 2021. The first product that we released back in the days was like an active liquidity management solution, the first iteration of Vaults, Mellow Vaults. And at the time, we released a research paper before the release of Uniswap v3. And then Uniswap v3 went live, and we went live with it. And we bootstrapped the liquidity of Lido ST of Olympus, and a few other projects using the ILM toolkit that we designed. So things went well, and we kept iterating and following the various DeFi, I would say, trends and creating new vaults. And so in, I think, 2023, early 2024, we released a new generation of vault, restaking vault, more specifically, that plugged to Symbiotic and EigenLayer. And with these vaults, we amassed close to, I think we reached like 900 million TVL at the peak during DEF CON last year. We're kind of sitting at 500 million these days. And so things are going well. We've been focusing on staking and restaking for quite a while. And now it's time for us to expand beyond just like ILM and restaking. We are in the process of releasing new vaults as we speak, which we call Mellow Core Vaults. And they are essentially allowing protocols, curators, node operators, asset issuers, anyone really to build their dream vault. They can do on-chain, fully on-chain, cross-chain. They can even do off-chain vaults, a little bit like what Ethena does with the basis trade on-chain and off-chain. Well, we can provide the stack as a service. So we provide the stack to like all these sophisticated entities, and they can run the vault as they wish. And things are going well. Like we are in stealth mode with a couple of like huge partners right now. And we will be releasing some large vaults in the coming months and weeks with exciting ecosystems that you may have heard on the timeline. That's pretty cool. I'm expecting hedge funds to run strategies using Mellow. I'm expecting asset issuers to bootstrap their own ecosystem using our vaults. I think it's an amazing tool for all these actors to create deep liquidity and yield products. So that's what we do. We still do a little bit of ILM. It's not really the core focus of Mellow, but to give you an idea, if you go to the Mellow website today, you won't really see any concentrated position liquidity management solution. But if you go to Velodrome across the superchain, or if you go to Aerodrome on Base, and you start LPing there on the major pairs, you will be able to delegate your liquidity to Mellow. And so we will be managing the concentrated position on your. So we are natively integrated there, but we're not like actively marketing the product because Aerodrome and Velodrome is actually distributing it for us. So yeah, things are going well, and the end of the year is going to be exciting because everybody's launching something, a protocol, a chain, and they all need vaults. So it's, yeah, we're well positioned.
Yeah, that sounds incredibly interesting. I look forward to hearing about the partnerships and projects and teams that you're collaborating with already behind the scenes. And who knows, maybe there'll be some use case coming up for Amalgam and for us to work together. Let's
Yes, sir.
see how that
I'm
goes.
sure.
Let me ask a quick question about I don't know if this is related to velodrome or aerodrome, but with those concentrated positions, there's no like impermanent loss hedge associated with those, right? Or is there maybe?
There is none. Like, we're trying to minimize it. Actually, if you're going on Aerodrome right now and you're going on ETH USDC or something like that, you will be able to delegate to us, and the APR that you will see on the front end will be much lower than the one that you potentially get if you're getting like a very highly concentrated position. But it's like net APR, net of IL. So yeah,
Got it.
there is no edging, but we're taking IL into consideration to build the model and rebalance the pool.
And so you're able to, so this is just like out of curiosity, you're able to rebalance, like you're saying people create a concentrated liquidity position and then they delegate it to you and then you manage it. So that sort of what I guess I'm surprised by, and maybe you could,
It's a single
it's
position. It's a single position. It's not unique per user.
got it. Okay. That's what I was asking. I was like, it's not like I can just make up a position and delegate it to you.
Yeah,
You've like in the canonical like mellow aerodrome, like this is our managed position that we're have for this pair.
yeah, exactly. Yeah, yeah.
So similar, that's similar to the fluids approach to how they have people market make on their decks. It's like everyone's in the same position.
Yeah, they approached us to release the ALM there. You're right. But I think they have Fluid as a open stance on ILM, whereas Aerodrome is focused on just like Mellow.
I'm curious, like with your vault system, and this is selfishly about what we're planning on doing, and so asking questions for ourselves. But we we're interested in actually trying to hedge IL using options, and we want to use Derive as a settlement layer, so it still stays in the decentralized world and not in a custodial fashion. I think what you're saying about Athena and being able to offer custodial or work with custodians to use off-chain products is super interesting as well. But is that something like if we wanted to set up a structured product like that, is Derive something that you guys could support? It's just no
Yeah.
chain, right?
No, definitely. Like the Vault system that we have and that we are releasing right now, it's highly versatile. You don't need like whenever you want to deploy on a new chain, it takes a day. And whenever you want to plug into a new protocol, it takes no additional code. Okay, it's like fully on chain. It's like the flexibility of a multi-sig with the security of a fully on-chain smart contract. There is no adapter needed, so you don't have to develop a new solution, a new adapter, and get it audited whenever you want to tap into a new protocol. It's just a matter of whitelisting smart contracts and addresses and interacting with them. It's like a fully custom vault system that has never been released before. And so if you want to tap into Derive, you can do it like tomorrow using our Slack.
Got it. That's very cool. And then I'm just curious, has anyone else talked to you about trying to hedge IL using options? Is that I thought this was an obvious thing, but like the more we've been talking about it, it seems like people are like not talking about it, which I was
Mm.
surprised by. Is that something you've seen or heard,
Yeah.
or do you have any thoughts on that?
What we see a lot, I'm not like an expert in terms of IL, so I wouldn't be able to tell specifically, but usually when we talk a lot with institutions, we have a B2B product mainly. Like our clients, they are like either protocols or curators, capital allocators, even digital asset treasuries. And so what they want, and they are not going to, in many cases, they are not interacting with AMMs, but rather with like clubs or CLOBs or perps, right? Spot or perps. So it's not like IL is not really like a topic. And to be honest, I'm not too deep into the financial kind of components of the strategies, but many of them want to use options. but they are going to tap into Deribit, for instance, or maybe on chain with Derive, but it's still tiny, I think, in terms of size. IL, to be honest, I don't know. I don't know. I don't think like they provide a lot of liquidity into AMMs.
What I options? What do you mean?
Yeah, sorry. Yeah. So my point is, I don't think IL specifically is a topic that I don't speak about IL frequently with
Yeah.
the vault setup that we have. I think like
Yeah.
people they just want to use perps to today. A lot of the business cases are related to replicating what Etienne does, which is a different way to generate yield. It's not like providing liquidity on dexes.
The background on this, I was just more curious if anyone has ever even been like, hey, would you support Derive? Or so not necessarily needing to get your 2 cents on the technical side. So sorry to if that seemed like a curveball, it wasn't intended at, but like some background on our situation. I'd agree 100% with your characterization of the LPs not really wanting to provide liquidity to AMMs because this whole strategy came out of talking to liquidity providers and finding out that none of them are set up for or have an appetite for providing liquidity to AMMs because of the risk of impermanent loss. So that was you trying to find a market for your product and you keep running into a wall, and at a certain point it's like, gosh, it seems like everyone's making this harder than it needs to be. Why don't we just hedge it for them? And that's
Yeah.
where this came from, is we can tap into a larger market by just saying, hey, don't worry about impermanent loss, just give us ETH, give us USDC, we'll give you this guaranteed rate or have some sort of incentives around it that we can, just in case the hedge maybe costs more than the actual yield, we can backstop that with token yield from our protocol. But hopefully that's not the case. And that's how we got onto this topic and why we've been talking to Derive. I don't think
And I think
Derive's
just to clarify my point, like I think the ability to edge IL is a feature, not like the end product, in the sense that when we're chatting with LPs or institutions, they want to build BTC or ETH denominated products. And
right,
so they have to be, they want to be exposed to a single asset. So the first question
right.
is, if I'm getting exposed to another one, I want to be edged in terms of exposure to my initial assets, right? To make sure that I keep my exposure. And then within the strategy, if I need to provide liquidity somewhere, yes, I agree that IL should be edged. But it's like it's a product within a product. It's a feature within the product, and it's needed.
Yeah, absolutely. In our case, we have both of those things, right? First is we had an LP that wanted us to offer them a product that was denominated in ETH. And so if we want market making liquidity and half of that is going to be in the other asset, then we need to borrow that to hedge the
Yeah.
exposure of it, right? So that there's first the delta hedge where we're borrowing a stable coin. And then the second is the gamma hedge, which is buying out of the money options. And then we wrap all that up and say offer. I think that Henry can correct me if I'm wrong, but I think we ran the numbers with the token incentives we were comfortable with and it was like a 10% yield on ETH. But
Yeah,
then
that's
also
amazing.
the other question he came up with was what if we want 2x exposure to ETH? So it's like,
Mm.
okay, now I gotta do some more rigmarole to come up with that, where you're basically. But at the end of
I
it,
think,
like
yeah.
you said, you're trying to design a product for hedge funds. Like at the end of the day, what we're doing is with a more quantitative understanding of how these products work together is we're basically creating a hedge fund and wrapping it with a vault and then saying, hey, just give us your ETH and we'll figure out the rest.
I think like one of the really cool business case that I see these days that could be like a very good business case for Amalgam is the bootstrapping vault. So let's say you're like a new ecosystem, a new L2, a new Bitcoin sidechain, and you want to, let's say like a Bitcoin sidechain. Okay, so they are going to attract Bitcoin denominated partners and funds. And the problem is that they need stablecoin liquidity and they don't want to do LP deals with stablecoin, with liquid funds on stablecoins, because it's super expensive to do such LP deals. So what they do is they are actually doing an LP deal with a Bitcoin fund, which is much less expensive. And the Bitcoin fund is going to borrow stablecoins while LPing. And so
Right.
by borrowing the stablecoins, they can actually provide liquidity on stable pairs while keeping the net exposure to Bitcoin, and bootstrap the ecosystem itself at the same time at a lower cost. So it's a business case that I actually see these days quite often.
Exactly, because that's similar to our ETH scenario, right? Because when we're borrowing those stable coins, we're not even doing it from Aave or Compound. We're just going to do it from the protocol itself.
Yeah.
And then ideally also having stable vaults, right? Because we want to make sure that those interest rates don't get out of hand. And so if we're plugged into sort of the aggregator ecosystem in general, that like when those rates do shoot up, that there's actual like capital flowing in to capture that higher rate. Obviously, that all this stuff you have to build it piece by piece, and then hopefully that when there's holes, you fix them. But that's ideally how it all come together. One other question I had for you is, what do you think about the value proposition of not needing risk curators and creating a sort of autonomous risk management system? Because like where you don't need to say this is how much of this you can put in or how much can be borrowed, where all that's like automated. What do you think the value of that is in the space?
I think it's a unique value prop. So the liquidity of the world, you mean? Things that are like fully immutable and not actively managed.
Exactly,
Yeah.
especially on the lending side.
Generally speaking, I think that the way the space is moving, I think you need the two types of products. You need like fully immutable and fixed products that can be used as primitive by anyone in the world in a permissionless fashion. I think it makes a lot of sense because it's kind of part of the Web3 way of like the composable Web3 world that we liked and that we really enjoyed during DeFi summer. But at the same time, when you're looking at all the institutions going on chain, they all have like specific needs, specific risk profiles, and specific customers. And so you need like fine-tuned granular products that are really like going to match with their prerequisites and requirements. Sorry. So I think both are needed. It's just that if you're building an immutable product that is a kind of a singular and unique managed product, you need to understand that you're just going to attract a specific type of crowd. Okay, so I think like back in the days, we were building for DeFi natives and DeFi natives only, which are a type of customer. And so it was fine to have a single monolithic product. I think that now that the space is expanding and becoming much more diverse in terms of like target customers, if you're looking at like the Coinbase integration with Morpho, the upcoming potential Revolut integrations and so on, across the world, you will have like many different currencies, many different risk profiles, and people with different levels of wealth. And so you can't have a unique product. There is no one size fits all solution in finance unless you're really building something that is universal. But it's tough to find something universal, right?
Sure. Yeah, absolutely.
What's your thought on the topic?
This is part of our thesis, right? That by building a permissionless lending protocol, one of the it's funny because when I started this whole thing, I was just like, if you could have there's a lot of people that have tried to put dexes and lending protocols together, right? This is not a new concept. Like the one of the inspirations that for Amalgam for me was a paper from Robot Ventures and Gauntlet about the various combinations of dexes and lending protocols. And this paper was like, I want to say 2021. And at the time, there was like Alpha Hemera, Gearbox. I think Balancer Boosted Pools was like a very innovative product at that point. Aave even had a product called Aave AMM. This is maybe a little bit too verbose of a answer to your question, but I started just by saying instead of building a DEX on a lending protocol or building a lending protocol on a DEX, the two examples of that would be like the first would be balancer boosted pools, where you're getting more yield by taking dormant assets and putting it into a lending protocol from the DEX, or the second one would be Alpha Mera, Gearbox, or what if you did it together, right? And you didn't have this sort of decision of building one on the other and the one. And along the way, the realization I had was that this also required figuring out how to basically do lending and on a DEX and basically rebuild Aave or Compound at the time. But now there's more examples of these lending protocols. But all of them require an oracle and require configurations, right? And like risk configurations of how much can be lent out and at what LTV and yada. And we really wanted to make something that was completely autonomous. So in order to do that, we had to figure out how to create something that could do all the things that the risk curators did without them, right? And automate that process. So I'm just fishing for your perspective on the value proposition of what that will create in the market. What do I think? I think that that's the kind of context of that question, I guess, since I'm doing things a little bit out of order. I think there's this huge potential market that fits somewhere in the middle of what's able to be listed on Aave and Morpho right now, which is a longer and longer list all the time, but is not by no means permissionless. And I think there's a number of tokens that sort of fit between that and shitcoins that can't have access to capital, especially new protocols coming to market, and that having access to immediate, whether it's leverage or hedging long tail risk, is a tremendous value add to those newer projects or tokens that will have a hard time getting listed on Aave or getting the right data feed for Morpho to create a vault for.
Yeah, no, I agree. I agree. I think that in some ways, Morpho and Euler, all the curated models like ours, is on paper is supposed to solve the issue because you can always find a curator that is going to look at like the long tail and create like a dedicated market or vault for it. But it does require it's not like permissionless and self-service. I presume that's what you mentioned, we're thinking about.
Exactly.
Yeah. So there's
Yeah,
still like a BD process.
and I don't want to pick. I think Aave probably has 50 assets or so, roughly. Morpho's probably higher. I'm not exactly sure where they're at. And I know that there's a bunch of experiments with trying to use oracles that are sourcing maybe off-chain and on-chain data. But I think primarily the thing that is really difficult about this problem is how to use primarily on-chain data, right? Especially with the risks of how easy it is to manipulate dexes. And yeah, I think that puts you in a situation where you really need something that has a listing to safely, confidently create a lending market for it. You need a centralized listing to have the off-chain data feed. Maybe you disagree or agree, but
I'm not an expert specifically speaking for lending markets. I know that we've seen that during the past few years that there were so many hacks happening on like forks because like parameters were not set were not set in a proper way. And so I think there is like a lot of fear around lending and for good reasons, right? And so if the project that will crack the topic and will make it like fully permissionless, I think will be huge. But it's a topic that's far above my pay grade, to be honest. Like I'm just like the BD guy. So if you do it, I don't have any job anymore, you know.
fair enough. Yeah, no, I appreciate that. So being the BD guy, then maybe my next question is, I think your sort of introduction, you alluded to more of a flexible like product that you can use like as a hedge fund. What stage is that? Is that going to be live in weeks, months, quarters?
It is technically live right now in stealth mode. We are going to announce like a big earn product with a partner in the coming days. And we will follow up that with, I think we have like for the next month or two, we have 10 vaults launching with ecosystems, foundations, asset issuers, and curators. And there will be, it will be quite diverse in terms of assets. You will see like stablecoin vaults, Bitcoin vaults, ETH vaults, obviously, because it's been the core focus of Mellow for the past few years. And yeah, so that's what we're doing. And again, like very diverse in terms of use cases. There will be fully on-chain, dedicated to a specific ecosystem, vaults that are like building liquidity for a specific asset on a specific chain. There will be pure yield products that will be cross-chain. And the idea will be to optimize, to seek for the best LP deals everywhere on chain, on the EVM. There will be perp DEX, delta neutral products. Think of it as like a HLP, but applied, extended to all the perp DEX, LLP, and so on Lighter, on Idachi, and all the perps. There will be also Ethena-like products where some of the trading, the legs of the trade will be happening on-chain with our Copper and Sifu integrations. So it's going to be a very rich ecosystem of products, and some of them will be tokenized. So you will be able to use them as collateral in DeFi. It's going to be quite exciting.
Where are you able to use them as collateral in DeFi? Are you able to say, is that going to be like on Morpho or?
Yeah, yeah. Most likely, I think like the primary business case would be Morpho integrations, including like really specific permission Morpho integrations where the liquidation is done like by whitelisted actors for tokenized hedge funds.
The other use case that I just of the topic we were talking about before, permissionless lending, is that like we can create pairs. Imagine all your tokens are ERC20, all your vaults are ERC20 or ERC 4626, right?
Yeah.
Because of that, any one of your vaults, you like when Amalgam launches, you can create a pair with the underlying and that vault. So just looking at your website, picking something, whatever came up on top, your Stakehouse Financial decentralized vault, validator vault paired with ETH or wrap staked ETH, you could do either one of those. And Amalgam would support that day one as far as just
Yeah, that's pretty
kind
cool.
of other ways that we can integrate on the other side, not just the vault side, but actually putting your product into ours is a possibility as well.
Now that's pretty cool, especially with this new product that is because the vaults that you see right now, they're a bit more like constrained in terms of integrations. But like the new ones that we will be that we are launching as we speak, they will be able to integrate to interact with Amalgam from day one. And if I remember, you're going to deploy on various ecosystems, L2s, L1s. And so what we can do is in a permissionless way, we can actually use the receipt token, but we can also use Amalgam within the vault to generate yield for LPs.
Right. Yeah, exactly. And then you can even, this is recursive, but you could also then create a 2x vault for your 1x vault using Amalgam as the source of being able to leverage it, right? That all of a sudden you can expand the product offering by twice as much. Oh, this is the 1x version, here's the 2x version, and Amalgam can be the source of that. Now, the one problem being is that all these products would be limited. The Achilles tendon of Amalgam and the risk protocol is that you have to have the market maker to support the liquidations, right? Instead of having that being curated by whitelist actors or that you mentioned, or in the case of traditional lending, it's created by risk curators. And our constraint is there has to be enough market making liquidity to support the borrows. And somebody has to be the market maker, which gets back to the beginning of the conversation is like you have to figure out a way to support these vaults by incentivizing LPs to take the market making position on these. Now, some of them should be correlated, right? So the risk isn't that high. You're just really taking a position where you're half in the vault, half not in the vault that of interest. and then maybe, and then there are some obvious risks of that, of like how quick can you get out? What happens if the vault unwinds or depegs from correlated asset? But anyway, I'm probably talking too much. Alexi, are we on track or off track?
There's no such thing as off track. This so far has been so much more interesting than anything I could have asked or discussed. So this has been perfect. Stay however on or off track that you're interested in being. But yeah, I think
Is it possible to get also, I want to say thank you for sharing some alpha about your upcoming launch. I'm going to keep an eye out for that. I hope everyone on the call is also keeping an eye out for that. Sounds very cool. When would we be able to maybe play with it? Do you guys do anything on testnet? Do you guys test, like, launch this on testnet so that we could play around with it on Sepolia or something?
Yes, we can share all the technical documentation today. I'll
Yeah.
ask the team to do it right after the call.
Yeah, because that would be something that we'd be very interested in playing around with and seeing if we can get a. The other thing that we may do, because we want to, engineering is slow. We're trying to figure out a way to start going to market. And one of the concepts I have, this is very half baked, so forgive me, because we still have a lot of work to do to even get close to this, but would be to have an approach where we have a similar vault strategy with existing DeFi products that we want to then transfer those assets from that strategy that I mentioned earlier, where we're hedging impermanent loss by with options, and then taking the underlying assets and really trying to deposit the notional volume into a market making position, but do it with like off-chain assets, or sorry, existing primitives, which would be, I think it'll be really interesting, because basically the setup would, you take a deposit, let's say it's stables, you take USDC and you take half or more of it and you put it on Aave, Compound, or Morpho, doesn't really matter which one. You borrow, say, ETH from against that USDC. Then you take the ETH you borrowed and the rest of the USDC that you didn't put into the lending protocol, and you put it into Uniswap or more Velodrome, or it doesn't really matter, some DEX. And then you take, say, 2% of the assets and you buy out of the money options to hedge the IL, right? And so now you're basically using a lending protocol, you're using a DEX, you're using Derive to hedge the options. It's basically a hedge fund, right? Like product, right? And then basically we could do this today with maybe your product, right? Could be something that we could test it with some other vault product, but since you're on the call, we'd love to use you over anyone else. And then
Yeah, I think it makes a lot of sense. Oh, sorry, I cut you off.
no, it's all right. And then when we launch our product, we'd start to basically move 10% of those assets into the same product but on Amalgam. And then a week later, we put 20%. 2 weeks later, we put 30%, right? And we start to move the assets from traditional DeFi products into Amalgam as a way of trying to, A, start attracting liquidity, because it's a hard thing to do. And I think the earlier to start, the better. And then B, we also are not trying to just flood Amalgam with liquidity right away and giving people a way to ease into it.
No, I like the approach, and I think that from what we've seen during the past year or so, maybe 2 years, it looks like it's LPs like products more than they like infrastructure. Right, so it's
Sure.
much easier to go to market with a fully fledged product that is using potentially immutable permissionless primitives, but packaged within a managed product that is going to perform with specific parameters of risk and so on. But essentially, you're like bootstrapping your own infrastructure with a product dedicated to specific LPs and family offices and liquid funds and so on.
Right. Cool. We got the seal of approval, so we'll start building it.
Yes.
Anything you have that you want to talk about thanks for sharing the alpha. It's super exciting about that product launch. Anything else you got going on at Mellow that you want to share?
We also have some cool things happening with Lido, which has been like a close partner for the past years, since the beginning, to be honest. We're part of Lido Alliance, and so we are collaborating closely with them on the launch of Lido V3, which I think could be also like a good business case for Amalgam, because Lido V3 essentially is a way for node operators validating Ethereum to run validators, so they can essentially run their business and mint ST-ETH behind the scene. So essentially they attract ETH into a Mellow vault, it goes into their validator, and they mint ST-ETH with it, and they can deploy it into DeFi. So it's a huge market to win. We're talking about like billions and billions of ETH in value, and we can essentially bridge it to DeFi instead of remaining locked into vanilla staking systems. And I assume that this will drive a lot of borrowing demand for stablecoins. It's going to drive a lot of liquidity for DEXs. And so it's something that we are about to release with Lido in the next coming weeks, and potentially a big unlock for DEXs and lending markets.
So let me ask about this. So if I understand what you said correctly, could I, as a solo staker, use this? Or is it a little bit more?
I think technically speaking, you will be able to do it, but it's not going to be highly efficient if you do it this way, because there will be like various tiers in terms of like ability to mint ST-ETH. So if you're going the permissionless way, there will be like a really low LTV. So let's say, I don't know, I'm going to share some dummy numbers, but you bring
Sure.
100 ETH, maybe you will be able to mint just like 30% of it, because it's permissionless and they have to protect the peg, ST-ETH peg. They don't know if you're like doing a good job in terms of validation, right? So you could be slashed, which would harm ST-ETH because it's composable. It's the same ST-ETH that you get from Lido V2. And so that's also the big benefit of it, is that you can be like a solo, I would say like a new company operating validators. You're bootstrapping your activity and you get access to LPs, you attract ETH into your validators, and then you mint ST-ETH and you have the liquidity of Lido, which is, I don't know, like it's $40 billion worth of ST-ETH. So that's amazing. It gives you the same power as like Lido itself.
Yeah, that's super interesting. It's like a much less permissioned access to tokenizing
Yes.
your proof of stake. What I'm pulling up my validator right now, and it, of course, for this is right now it's offline, not a testing, so it's perfect for the, definitely wouldn't qualify for the full stake. How do you, from what you know, like how would they structure the levels? Is it how much, or is it your track record, or like how are they
It's more track
rating the
record.
ability?
Yeah.
Okay.
I think they are like various paths, but it's mainly track record and stack based. So if you're doing it in a permissionless way without disclosing who you are and what you're using in terms of stack, then you get like a specific LTV and a maximum capacity of minting ST-ETH. And then you can go to the next tier. You have to disclose which company you're working with, what is the company, and then you have a track record of slashing events. And so it gives you more ability to mint ST-ETH. And in the end, there is, in any case, a cap, because you don't want ST-ETH to be operated in majority by a single validator. So
Right.
it's a way for Lido to be more permissionless, but at the same
Right.
time to keep ST-ETH at peg and protect it.
And I don't think people are arguing about this anymore, but I think this was a big debate when Lido was coming to dominate the staked ETH
Yeah.
market, where everyone was saying you have this concentration of power over the validators with Lido, and they got a bunch of flack for it, and it was a big debate on crypto Twitter. This sort of, I think, is the remedy for that, right? Because now you all of a sudden can say, well, look at all these solo stakers that are completely autonomous from Lido, but are able to mint staked ETH.
Yeah, definitely. And they did a lot for the decentralization aspect of it. This is obviously one of the big moves. which is pretty cool. But like another one that is also as important, if not more, is the ability. So they have a dual voting system now. So whenever the Lido DAO votes for like new, like votes anything actually, ETH stakers have the ability to unstake and vote against it, and it's delaying the implementation of the vote on chain. So if you unstake from Lido, you're actually increasing the delay until the change is implemented in the code. So you can actually show that you're disapproving as an ETH holder. So in practice, the LDO token holders, they can't implement a change that is going against ETH holders anymore. It's not possible.
That's super interesting. Yeah, that's really cool. I just even it like from my solo stake perspective, if it's 30%, right? What that means is that right now I'm thinking about taking some of my crypto and actually putting it into Amalgam because I think that my upside is I have the most control over my upside of my portfolio being in the founder role of what I'm investing in. And so from that perspective, I've been selling ETH, not because I'm bearish on ETH, but because I just think that I'm more bullish on myself than I am on ETH, right? And what we're building. And one of the problems I have is I don't really want to get rid of my staker. I feel like it's not just the solo stake that it's part of being a part of the ecosystem. It's like having your own validator and being a part of the ethos of this decentralized network and being a small cog in that giant machine. And but being able to being able to take 30% of staked ETH and mint it, that for me, having one validator, it's still a huge unlock of capital that I can now essentially use in DeFi to get access to some of the underlying assets to do something else with without having to sell the ETH or close the staker.
Yeah, no, this is pretty cool. You can also short ETH and replicate Ethina while validating the network, which is pretty
Right.
cool.
Yeah. It's all very cool. So
I quickly want to chime in. I'm sorry to interrupt the flow of things, but we've already reached time, so I want to try and give a couple of minutes to. I think we only have one question, but that we'll go through and answer. But before that, yeah, let's do the question quickly, and then we can round things out with any final thoughts and stuff. Will, this is directed towards Amalgam. I believe we will have TG in the near future. May I know how the Amalgam token is going to be integrated into the platform, and what are the use cases of the token in the Amalgam ecosystem?
yeah, and the main thing that we're going to be doing with the token is essentially, my God, I've been asked by so many people, like, what are your tokenomics? What are your whatever? And I think that I'm really excited to see that sort of the consensus has converted to this whole thing of if you have revenue, then your token, you can prop your token up with that revenue. Otherwise, everything else is eventually going to zero, right? Like these tokenomic incentives don't work unless there's some sort of revenue, right? And so we will have revenue because we're taking a percentage of interest charged and using that to support the protocol. Also, I think the other tokenomics model that I think I've always admired, I think Aave was one of the first proponents of this, or the first people to do this, was having they call it the safety module, where you stake Aave, and that Aave is used to help basically backstop the risk of some sort of black swan event or some sort of illiquidity from price movements or liquidations not happening. And so in our situation there, we have created an automated risk framework, but there's not actually ever anywhere going to be a perfect solution to lending markets being susceptible to bad debt when the price moves quickly. That's not something that you can completely mitigate. And so one of the things that we will eventually roll out with a token is a similar safety module where basically it may be actually in the form of the token, the Amalgam token, and a stable coin of some sort, or even a vault product where it's a structured product that is ensuring these things. So if something goes to zero or goes to that, there's actually a structured position that would grow in value, and then that structured position growing in value could be used to offset any illiquidity from liquidations that couldn't happen fast enough because the price moved too quickly. So those are the two things. One is that token holders will benefit from the protocol fees, and the second is that there will be a staking product around the token that will be for those that are super bearish, super bullish on the product and are willing to support the ensuring of illiquid events on the protocol.
Hopefully that answers your question, Vinod. Yeah, we'll be launching in Q4 mainnet and for mainnet, and then we'll be doing TG during Q1 of 2026 for the other question in chat. Okay, cool. We're over already, so I'm gonna force us to wrap things up a little bit. Etienne, before we close things out, is there anything you want to tag on? Is there anything else you want to say? Where can people find Mellow? And yeah, anything else you want to add?
Yeah, first of all, thanks a lot for the invite. It was a pleasure to chat with your community and with you guys. And look, I'm pumped for the mainnet release in Q4. So I think we should keep in touch, and I'll send you the vault documentation, and maybe we can cook some cool stuff, some cool structured products on top of it. And yeah, so look, if you want to learn more about Mellow, you can go to mellow.finance to look at the vaults. Maybe you find something vault that suits you and you can start helping into it. If you want to, we have documentations as well on the website. And follow Mellow on Twitter, because as I mentioned, we have a lot of big news in the coming weeks. So it's going to be quite exciting. And yeah, hopefully we plug Mellow to like an amalgam strategy on top. That would be amazing. Thanks a lot.
And where can people follow you at?
Oh, they can go on Twitter and Etienne1337 on
1337.
X. Yes.
Okay.
Etienne. Yeah.
If I don't follow you already, I'm going to go follow you. And I encourage everyone else to do the same. Thank you so much for joining us. I know I didn't ask where you are, but if you're in France, thank you for
Yes.
staying late on a Friday night and hanging out
It's
with
a
us.
pleasure. It's a pleasure.
And I hope we didn't cut too much into dinner time or whatever festivities are happening. And I hope you can go still enjoy your Friday night.
Thanks a lot. Bye-bye, guys. It was a pleasure.
All right. Thanks everyone so much, and we'll be back next week for the dev community or the development update, the dev call that we have bi-weekly, and then we'll be back at the end of the month again for another MA. Thanks everyone. Have a great weekend and rest of the day.
Cheers.
Cheers.
Take care.